guys, and welcome back to another episode of Money Mindset. So in prior videos we talked about, the prep work of leading up to purchasing a home. Now we're going to talk about what happens once you go under contract all the way to your closing date. So you've already, put your offer in, the seller has accepted it, everything's signed, you have a contract in hand. Congratulations, you're buying this house. Now what? So the first thing you want to do, number one, schedule your inspection. Now your realtor should be helping you with this. They'll be able to recommend inspection companies to go to. You can always call around or Google, whatever it is, to find inspectors in the area to make sure you're getting a good price and everything else, but you want your inspection scheduled. As you're scheduling your inspection, there's a lot of different types of inspection reports to get. There's something called a wind mitigation, there's a 4-point inspection, there's your regular inspection, there's termite, also known as WDO or WDI. All sorts of wood-destroying organisms or wood-destroying insects. So there's all sorts of different reports. You want to talk to both your lender and an insurance agent to make sure you're getting the right ones. The lender might be able to tell you everything, so you might not need to go to insurance agent, but if they can't, go to both. So the insurance agent most likely is going to need, a 4-point inspection if the home is more than 40 years old. The lender, if it's a VA loan, they're going to need the termite report, stuff like that. So. And then in Florida, pretty much everywhere you need the wind mitigation. So from there you have your inspection scheduled, and then you go on into your escrow deposit. You're also known as your earnest money deposit, earnest money, EMD, whatever it says or however it's referred to. It's all the same thing. So it's money that you're putting down normally within the first 3 days of going under contract that's going to be used towards your closing costs and your down payment later. So it's not any money that you're spending, it's money that you're tucking away with the title company, who's the neutral third party. They're basically the attorney of the situation, and a lot of times it can also be through an attorney that you're sending it to instead of the title company. In Florida, it's the same thing. They're the ones that facilitate the closing. Anyways, you send your money over to them. Most of the time, your earnest money deposit is going to be about 1% to 2% of the purchase price on it. So let's say you're buying a $300,000 house. Your earnest money is $3,000. Your down payment on it's going to be $10,000 down the line. Your closing costs another $10,000. Let's say $20,000 total for your expenses. Well, now when you get to closing day, you're only going to have to bring the remaining $17,000. So, anyways, more on that later. But tucking away the earnest money deposit, you can talk to the title company, your realtor, the lender, whoever it is, as far as getting the instructions on how to send the money over to the title company. So you have your inspection, number one, earnest money deposit, number two. Now we're going to get into the loan application. So the loan application is something that the lender will go ahead and send over to you. This one typically happens in the first 5 days of being under contract. During this time, you have to go through and sign a bunch of compliance paperwork in order for the lender to even get started on working on your loan and on your file. There's been a lot of lack of regulation, say, in the mortgage industry in past years until the last housing crisis in 2008, 2009. After that, the mortgage industry became very regulated, and there's a lot of paperwork we need you to sign off on as far as, just compliance documents. You're not going to use the house for money laundering, no terrorism, you are who you say you are, you're not discriminated against, no one's forcing you to do this, you're not going to be committing fraud, no false social security numbers, all of that good stuff. You're also verifying the information that the lender has from you, so you want to make sure that, when you're looking through the paperwork, they have your correct social security number, date of birth, addresses, employers, all that good stuff. So it's about 40 to maybe even 100 pages long that you go through. A lot of lenders do have it electronically, so you can just click to sign through. That loan application is also going to include a loan estimate. So the loan estimate is going to tell you approximately how much money you're going to need to close. The loan estimate at this point in time is supposed to be purposefully overestimated on the cost. The lender and pretty much everyone involved does not know what your costs are going to be yet, because a lot of the costs are determined by the home that you're buying. For example, your insurance. So, got the loan application checked off. Number 4, we're going to review the inspection report. Now, some of these can happen in a little bit of a different order. I'm kind of ranking them in order of importance to knock them out, in my opinion, but consult with your lender, your realtor, and everyone for your specific situation. Anyways, so the inspector went out to the property. You now have an inspection report or multiple inspection reports. You want to take the proper ones and send them over to an insurance agent that does home insurance. You can go to someone local, you can go to a big box, Progressive, Geico, whatever it is. Whatever you feel comfortable, you can ask for referrals, and they'll give you a quote on what you'll need as far as which quotes or which inspection reports you'll send over to the insurance agent. So maybe they'll want the 4-point and the wind mitigation, but don't send them the other ones. We don't want to overshare too much either, so just send them what they're looking for. They'll give you a couple different quotes. They'll talk to you about the different types of coverage on the house itself, and you choose one. Then you're going to send that information over to your mortgage advisor, your mortgage lender, and they're going to make sure it gets all synced up to your monthly payment, and then you'll start to be able to fine-tune some of those numbers for the closing. The next step, or a step we want to do at least 30 days prior to closing, is checking in with your HOA for the property that you're purchasing. If there's no HOA, disregard this step. If there is an HOA, you're going to need to submit an application to the HOA. Just like when you're renting, they do a background check on you, the same thing for when you're purchasing. So it's not really something that involves the lender too much. They won't be able to guide you on it as much. The realtor can probably help you contact the HOA, get the HOA's information, whether you need to go in person to the office or you just submit an application online. They all do it differently. Some of them are at a cost, a couple $100, sometimes it's not. Anyways, so the next step, we've already gone through, your inspection, we've gone through your earnest money, we've gone through your loan application. Now that loan gets submitted to underwriting. So during this time, we've had, a very intensive first few steps. All of that stuff was happening within the first week or so of being under contract. Now we slow down the pace, at least from your side of things. The lender's going to be working on getting all of your, paperwork in order, making sure that the house is free and clear of any liens, any report. They're just doing all sorts of back-end work on it. So, that being said, they might reach out to you throughout this process on a couple other pieces of paperwork, maybe some updated banking, maybe an updated pay stub or two. Whatever it is, a couple e-signs, go ahead and try to get to that to them in as timely of a manner as you can. It just helps them get the job done quicker and better for you. The more we do ahead of time and the quicker we process through these items, the sooner we issue something called a clear to close. Clear to close means that the lender is done with everything that they need to do in order for you to purchase the house. We want that clear to close obviously done before your contract date or your closing date that's listed on the contract. If the clear to close does not come out a few days prior or a couple days prior to your contract closing date, you'd get a delayed closing. So importance of moving quickly on everything else. Anyways, through this time of processing, one of the things that the lender will do is order an appraisal. This should be about the last time that you're coming out of pocket for any costs during the home purchase process. So if you had your earnest money deposit, you paid for the inspection reports. Now those inspection reports, depending on how many reports you got, can be anywhere from a couple $100 all the way up to, I've seen people go over $1,000 on it because they want reports on their pools, or maybe it's a huge home, or whatever it is. Anyways, the appraisal is the last time you come out of pocket prior to closing, because no matter whether you close on the house or not, you will have to pay, or the appraiser did their job and they get paid to do so. Anyways, so the lender will order the appraisal. They'll send you, the credit card form or whatever it is in order to purchase it. The appraiser goes out and they make sure the house is worth what you are offering for it or what you went under contract for it. If it's not, then the property and everything with the sellers, it goes back under negotiations. We want to make sure that you're buying it for what the home is worth. So consult your realtor, consult your lender, and we can get into this on future videos on it, on what happens at the different stages of negotiation. So once the appraisal report comes back in, which is generally about a week or so from when it's ordered, we go ahead and finish up the last, the loan side, go ahead and finish up the last bit of your paperwork, and we communicate with you still, between now and closing date if there's anything else that we need from you as far as more paperwork, more e-signs, all that good stuff. We get it all wrapped up and we issue your clear to close, like we mentioned. That's a wonderful point where we can start finalizing the numbers of exactly how much money you'll need to close down to the exact penny. So we've done the loan estimates all along the line. We've gotten, newer and newer versions or more fine-tuned versions of those as you progress, but now we can get down to the exact number because we know we're closing on this date. We know we can prorate all of the different items, the taxes, the insurance, everything to that exact date. So the lender sends the documents over to the title company goes back and forth, we both double check each other's work, make sure that all of your numbers are exact, and we send that over to you. So now what do you do with all of that? One, obviously always double check, look over, everything looks good, as it should, and then from there you can head on over to your bank. You can send one final wire over to the title company, the closer agent, or the real estate attorney, whoever is facilitating your closing. And you send, the exact amount that you need to close, the remainder of your down payment and closing costs. minus the earnest money deposit that you had in before. So whatever number they give you, that's what you want to send the wire for. And then from there, you schedule your final walkthrough with your realtor. So the point of the final walkthrough is to make sure that the property is in the same condition from when you bought it or when you went under contract for it. We want to make sure that, heaven forbid, a pipe were to burst, or let's say you have, a robbery, or or burglary, anything happens. It doesn't happen often, but it does happen. So you want to guard against that, because once you sign for that house is yours. So you want to double check it all, make sure it's in the right condition before you go to signing. I always advise doing it right before, as close to the closing time as you can. Then, from there, bring your driver's license and any other paperwork the lender says you might need, and head on over to closing, and you've got a big old stack of paperwork to sign through in order to get your keys. So you sent the wire on the closing date, you went to the property on the closing date, you go to the actual closing itself, or the time that you signed the paperwork, and you're done. Congratulations, you just bought a house. That's it. Thank you guys for watching another episode of Money Mindset. As always, feel free to drop us a comment down below. Let us know what you think of it. If there's anything that you want us to expand on, either through this process or for separately in another video, we'd love to hear from you guys. Have a great day. Bye.